Welcome back. Here with us on Mazar Morning Call, and let's get to our first corporate conversation on the show today. We're focusing on the auto ancillary space. BMW earlier this month announced a guidance cut for the current year FY24 due to sluggish demand in some of its key markets like China. And BMW is not the only one. A lot of other global OEMs have been downsizing their forecasts for the year. So how can this sort of a guidance cut from these majors impact Indian OEMs and, of course, Indian auto ancillary companies? To talk about this, we have with us K. Ajit Kumar Rai, founder and chairman at Suprajit Engineering. Mr. Rai, great to have you on. So the headlines coming out of some of these major companies, I mean, it's BMW, but it's also been Volkswagen, I think Porsche. Quite a few of these OEMs have all been pointing to the same thing, which is sluggish end demand. Now, you tell us, first of all, what is Suprajit's exposure to some of these global majors, because you do have a sizable, export presence as well. So what is your exposure, and will this impact your own forecast for the year?
Good morning, and thank you for having me on your channel. I think what you just mentioned about some of the, shrinking of volumes of Volkswagen, BMW in the public space is very valid. We have been, of course, big suppliers to some of these names. Globally, automotive is not growing. Actually, it's probably degrowing as we speak. The demand situation is pretty poor. Still, the offtake of the vehicles by all these regions, particularly in North America, in Europe, has been pretty poor. China has been, compared to the past, has not been exciting. They're also probably in a low single-digit numbers. So if you look at Suprajit, I think, 50% of our business is domestic focused and 50% to some of these major customers of ours. And what has been good for us has been that we have been winning a lot more contracts than our competition. So if you look at the overall picture, despite there is no growth or a negative growth in the global automotive market, we have been growing reasonably well, thanks largely due to some of the new contracts that we have been winning with some of these marquee names that you mentioned.
Sir, for the full year, however, I mean, in the earlier part of the year, I think the indication was that Suprajit could definitely do double-digit growth. Will you have to scale down those expectations now? What's the full year growth estimate you have at this point?
See, what we have said in our business forecast, in the first quarter or end of last year as a guideline for this year is that we will, as a consolidated group, will grow in double digits. We are still holding on to that guidance, again, thanks to largely some of these new contracts. In the first quarter, we had, I think, 8.5–9% growth. And I do expect that with the strong domestic market as well helping us on an overall picture by end of the year, we still are hopeful of doing a double-digit growth, despite the global outside of India markets being pretty poor.
Okay, all right. Good morning, Mr. Rai. So on the top line, we'll see a double-digit growth with margins in the vicinity of 12–13%?
Yeah, I think we have sort of said that we should be aiming at around 12%. That's where we are currently on a consolidated basis. And we hope to maintain that and, let's see how the year goes. As we said, if the growth has been robust, it's much easier to improve the margin. When the growth is a little tempered, then I think it becomes a challenge. But I think 12% is what we have guided, yes.
Okay, all right. Mr. Rai, I wanted to focus on the largest part of your business, which is the Suprajit Controls division. That's around, I think, 47% of your total mix. And you've done well over there in terms of improving the margins. When do we see margins for this division go to double digits? Point number one. And point number two is, what kind of growth are you factoring in for this division, since it's the largest part of your mix?
Good points. I think in terms of the margins, I would like to give a general background how the global auto component businesses are run. Typically, global auto component run, most of them are between 6 to 10%. So we have taken our first target at the mid-range at 8%. I think that's where we are now. The aim is to go to 10%, but I think it will take much longer period, at least a year or two, because global markets are very competitive and the cost structures are different, unlike India. So I think it's going to take, we are at the midpoint, which is, I would say, reasonable as far as we are concerned. In terms of the growth for the controls division, we had about 3–4% growth in the first quarter. we are still hopeful that by end of the year, as just now we discussed about how the global automotive business is, which is either at a flat or negative growth. The fact that we'll be able to, even if you're able to do 7-8%, which I think would be very good for us, and a consolidated base will certainly do double digits.
Okay. Mr. Rai, hi, good morning. Could you tell us, beyond FY25, right, you said you should do at least 10%. Does the environment that you're describing, does it dim the outlook for what you'll be able to do in 26 as well? Because if I look at some brokerage notes, for 26, growth assumption was a little higher, 17 to 20%. Will that need to be pulled back?
I think we're always optimistic in the futuristic numbers, I guess. But having said that, I don't know which brokerage report and whether it's for an India market or a global market, but global market will be.
That's a full consolidated full year FY26 growth for Suprajit. That was the
for us, is it? Okay. We don't really give a futuristic number like that. I mean, if the brokerages they've done their own homework. But for us, I think this year a double-digit growth and next year hopefully slightly better is what we would expect. Simply because that we have won certain significantly large businesses. They will all go into production in the next financial year. So that's probably the reasoning behind those comments by the brokerages.
The acquisitions you've made, etc., all of that will...
yes, all of them put together, yes, of course. Then certainly, that number can be met because we just, did an acquisition that will also add to the top line. So with all that, yes, I think that is possible. Yeah.
So Mr. Rai, tell us on the auto side, Mr. Rai, when the slowdown that you're describing, is it very recent or has it been, we've been in this environment for a while?
And if I could just add to Prashant's question, sir, if I could just add to Prashant's question, this global slowdown, do you see it ebbing anytime soon? And is it because of the flood of Chinese EV cars? There's the huge flood in the US and then in Europe, and now we have tariffs going up. So is it because of that, or is it some other structural nature, and will it, continue to last?
I think what is happening globally is that, post-COVID, there has been a surge for a year or so. And then again, with the interest rates going up, the first challenge for any family is to have a home or whatever urgent things. A car purchase can be postponed by a year, 2, 3 if needed. I think that's what is happening. The current interest regime is so stiff, and we all know that the interest costs are so high. The families cannot afford to have an EMI which is not possible to meet from the salaries and things like that. So I think that has been the challenge in the global market. But with the interest rates coming down in the US as we see, and Europe is also talking about it, I think the situation will change over a year's time. And when the tide turns, I think it will turn very positively. But I think we are probably a year or two ahead of it. We need to see the effect of lower interest rates really, sort of going to the grassroots level. So I think that's going to take some time. For us, I think it won't matter that much because of, what's happening in our business is that the smaller competitors are losing out and the stronger and value suppliers like us are gaining traction. And there is a consolidation happening and that we are the beneficiaries of it. So that is what is helping us in terms of the growth and the margin profile that I talked about. Automotive industry per se is in a tough wicket. At least for another year, as I see it in the global market.
Got it. Mr. Rai, final question before we let you go. You have given us a fair bit of color on the largest part of your business and how do you see the globes play out as well. But you briefly mentioned about that inorganic growth. You did that acquisition, I think SCS, which has a revenue of around 450 crores, but it was EBITDA negative last year. Could you tell us what is the turnaround plan? Does it turn EBITDA positive, say in FY26? And how do you see the revenue scale up from around 450 crores?
It's about a 40 plus million euro business that we have acquired. Part of it has been concluded. We just completed the Poland, Germany, and the Morocco side of the transaction, and the China and the Canada side of the transaction is yet to be done. So that will add to the top line. Yes, it was an insolvent company. And so obviously the EBITDA margins were negative because of the various expansions they were doing at various places and not being able to conclude successfully. I think what has happened now is that we are going to be having two major plants, one in Morocco and one in China. And then the rest of them will all be basically support systems. So the whole cost structure will change. But to execute this, it will take at least, I would say, a year or two. We got a good value buy, but we need. I think we'll have at least 18 months work to set everything in place, and then probably make it a decent asset for us.
So by FY26, it could turn EBITDA positive, this new acquisition, by the end of FY26.
Yeah, let's hope so. I think that is possible.
Okay, appreciate you joining in, Mr. Rai. Thanks a lot for
you.
joining in and giving us all of those details.
Okay, all right. That is the word from Suprajit Engineering.